All right, I'm going to start on choosing a broker. If you are choosing a broker, so the broker, these brokers are the people or their companies that provide you a platform where you do your forex trading. So they give you the trading platform, which is these days it's electronic. It's a trading platform, which is an electronic platform, by the way, electronic. And in most cases, you can do it on your phone. So you can even download, means you can download an app on the if you are using the iPhone on the Apple Store, or if you're using an Android phone on the Google Play Store, you can download an app from the brokers. That's the platform that they give you, the brokers. They don't just give you their platform, they also give you leverage. See, this thing that we call leverage, it gives you wings to fly when it comes to forex trading. Leverage gives you wings to fly. It's like a credit. It starts from 1 to 1. It can even go up to 1 to 1,000. See, this is what the leverage can do to you. You get it from your broker. So if you're choosing a broker, obviously you want a broker with a good platform, a platform that works. When I say it works, I mean it doesn't have glitches. Imagine you want to say to buy, you press the buy button and then it freezes or it just like crashes. You don't want that. You want a broker with a very good platform that works properly, that there's no glitches or whatever. Then the broker also gives you leverage. You have to check what kind of leverage the broker is giving. Most of them, they go from 1 to 1 to 1 to 1,000. All of this, the most famous one, the highest, it's usually 888. I don't know why they choose 888 for leverage. What the leverage does to you is that if you put 1,000, let's say you put 1,000 Rand, you trade as if you have 1 million Rand. You get that part. If you put 1,000 Rand and you have a leverage of 1,000, it multiplies your money. So whatever leverage that you use, it multiplies your money. It makes you be able to trade big volumes. The advantage of trading big volumes is that you make money fast. The disadvantage is that you also make losses fast because of the high leverage. So if you are a novice, if you are starting, try to use a small leverage. It's actually to your advantage to use a small leverage instead of a high leverage. For me, I use 1 to 50. I don't want to use a leverage above 50. I just use 50. Or sometimes I even decrease it if possible. Because this is how, remember I said this video, I'll be focusing on how you can stay in the game. And one of the ways to stay in the game is to keep your leverage as low as possible. That is important. And now your broker, he gives you the platform, or they give you the platform. You are going to load money. So into this platform, you load your money, which is real money, by the way, to trade. They also give you fake money. They also give you fake money to trade. You can use this fake money to trade in an account they call the demo. So they give you a demo account. The demo account, what it has is fake money, but all the other features are correct or are real, like the prices or the exchange rates that you see there. If it's the price of gold or the price of platinum or the price of silver, it will be the real price on the market. However, the money that you'll be using to trade in that is the fake money. That's a demo. But you can load in the real account here. You load money into your real account. To stay in the game, it is good for you to go to your demo and do all the experiments that you want to do until you are satisfied. And when you're choosing money, can you guys mute the mic? Mr. John, can you mute your mic? Okay, let me mute it. So when you're choosing the money that you're gonna have, because you find that most brokers can give you even 100,000 or even $1 million in your demo account. They can give you access to $1 million or 10,000, whatever. I would encourage you to put in your demo the amount of money that is similar to the money that you are going to put in your real account. So you go to your demo, set your, on your demo, make sure you set, yes, make sure you set your leverage to the real leverage that you're going to use in your real account. Also, the money that you're going to use in your demo account, make sure it is the same amount as the money that you want to put in your real account. Very important to do that so that you can feel, you don't lie to yourself that you know what you're doing, so that you can feel if all these, because each person really has got their own strategy. What you shouldn't do is to go to someone and say, hey, can you teach me your strategy? Yes, I can teach you my strategy. It has been working for me. It may not work for you because we are different people with different temperaments. Whereas when you panic, I may not panic. When you are not panicking, I may be panicking. So that's the difference there. So you try to create your own strategy. So the demo account allows you to do all these kind of experiments for yourself. Then from the broker again, once you make your money, you want to withdraw the money. Withdrawal. This is where it usually messes here on withdrawing your money, because in forex you can make a lot of money. You can put maybe 1,000 rand, and before we know it, you have 50,000. Then you say, I want to pay school fees, or I want to buy a car or something. You want to withdraw the money. If you go on the Apple Store, the App Store for Apple, the App Store for Apple, if you go there and you want to download an app for the broker, try to check the reviews and see what people are saying about that broker, especially in terms of withdrawal of money. Do they allow you to withdraw? How long does it take to reflect in your account? What kind of problems do you face when you're withdrawing? If you face a problem, do they have customer care contacts that you can contact so that you can be helped with the withdrawals? Check that, because usually people cry on different platforms when they are struggling to withdraw their money. So try to make sure that you check the credibility of that broker in terms of withdrawals. There are several brokers that actually promise instant withdrawal. Like if you say withdraw, before you know it, the money is in your account. There are some like that, especially those ones that are local. Let's say they are South African, they are based in South Africa. It's easy. But then you have other very credible brokers that are international. You find that if you request a withdrawal, it may take some time to reflect because they are transferring from an international account to your account. It may take maybe 2 to 5 days to reflect, but in the end, it reflects. We know these things of transferring money across international, from country to country. We know this. So make sure you check the credibility of the broker in terms of this. The other part that I also want to talk about is the spread. I think it's also important. The spread here is the difference between your buy and sell price. So buying price and the selling price. This is what we call the spread. So different brokers give different spreads. When you are choosing the app that you're going to use for this forex trading, check on the reviews again what people say about the spread. If the spreads are too wide, that's not a very good broker. If the spread is small or is narrow, that is a good broker, and you may want that. So these are the things that you check when you're choosing a broker. Any question before I proceed? Any question?
None for me. So far, so good.
So far, so good. All right.
Yeah, almost me.
Are you good,
Yeah.
Charles?
Yeah.
Oh, all right. Awesome then. So that's those are the things that you look for when you're choosing a broker. Um, Other than that, nothing more. I don't have to. I don't think there's anything more I can say. Maybe I can just give you a few names that I know. I said for myself, I use XM. Let's say brokers that I know. Brokers that I know. There is this one called Plus 500. They have their color code is blue. You see everything about them is blue. This Plus 500 is a broker. It's actually international. I think if you watch the AFCON games or even European soccer, you may find them advertising there. They usually advertise. There's a good broker. I use XM Global. This is what I use myself. Then there's eToro. I think it's written eToro. It's also a good broker, one of the famous brokers. Then there is in South Africa, most people that I know who were trading around here, they were using Hot Forex. It's called Hot Forex, etc. I'm just giving you a few of them. In fact, if you go on the Google Play Store and you Google eToro, you start seeing other brokers that are coming out, other apps coming out there, and you can check the reviews, where they are based, if they have something to do in South Africa and stuff. Check that before you say, okay, I'm going to choose Plus 500, or I'm going to choose eToro, or I'm going to choose Hot Forex. Check several brokers and see which one suits you, which one is the best for you. But I said I use XM Global. I'm fine with them because deposits, they reflect immediately. If I put money, it reflects immediately. If I withdraw, it doesn't come out immediately. It's 2 to 5 days. Then it reflects. Sometimes it takes 2 days, sometimes 3 days, sometimes 4 days. It depends, but it comes. I have withdrawn several times and I was getting my money. So on that one, I'm happy. Their spreads, it's also good, but it depends on the time. In fact, the spread changes the time. If it is during the time when the market is not very active, the spread will be large. It means the market is not very liquid that time. If it is during the most active period of the market, you find that the spreads also become narrow. This tells you that there are times that are bad for trading, then there are times that are good for trading. You try to go to those times when the spread is narrow. In fact, when the market is quite active, then you also participate during that time. Because in forex trading, it's not like you need to trade 24 hours. Even if you can just do it for an hour, then you come out of it, you do other things. That's very important. Don't be a slave to this thing. Don't be a slave to it. All right. Enough of the process.
Sorry, Kudzi.
Yes, sir.
Like on the leverage, you actually gave like a number, an indicator.
Mm-hmm.
On the spread, what's your recommendation?
Yeah, that's to say the spread now depends on the commodity that you are trading or the currency that you are trading. See? Yes, let me explain that on the spread. If it's gold, you find that the spread there, it will be something like, let's say, usually 35, around this 30, 35. See? It can even go to 30. On my, I'm talking about my own experience on the XM Global that I use. It's usually 35 for gold. The reason is that gold is very liquid. It has buyers and sellers, a lot of them. Yet when you go to other currencies, you find that they become more liquid during certain times. When other people, you remember markets in different geographical regions open and close at different times. Around 1 a.m., you start to see markets in China, in Japan, and in fact, in Asia, that side, markets will be opening. that time, if you're trading the Japanese yen, you start to see a lot of movement on the Japanese yen because the Japanese are now participating in the market. See, so the spread depends on what you are trading and what time you are trading it. So when you are using the demo, you're going to see now, okay, the other time the spread is 35. What is the best spread that I see on my gold? Oh, sometimes it's 30. What time does it become 30? That's how you should check. But generally, people comment on different brokers and the spreads that they give. You see the comments in the reviews of the apps that people say, oh, this one, their spread is too much. See, but then it's a matter of balancing things. You may find that they have a bad spread, but when it comes to withdrawals, they are good. Then you hear some people saying, yeah, we have a narrow spread, but taking your money is never possible. You see, so you need to do a balancing act there on the spread. Yeah, like if I talk of the USD, ZAR, when you're trading this current, United States dollar and the South African rand, you find the spread the best that they can give you can be 119. See, 119. That will be the spread written there. And yet it can go to be even 385. Their spread. So when it is 385 this time, it is a bad time to be doing your trading or buying and selling. It is a bad time to do it that time. See, but when it's 119, the market is very active. So the spread tells you about the liquidity of the market. Doc, it also happens like when you're doing in shares. See, if you go to the share to the stock exchange, you see this spread also there. And if you look at that spread on the shares, it tells you how liquid that share is. In other words, how easy it is to sell it, to find sellers or buyers of that that share. Yes, if it's too big, stay away from that. Or you know that if you buy it, when you want to sell, you may struggle. You see, so that's the key. That's what the spread tells you about. All right. Any other question? Any other question?
No, me, I'm fine. I'm okay for now.
Okay. All right. So now I want to go to how not to lose money. How not to lose money. This is a very important aspect of this whole thing, eh? How not to lose money. Okay. This is the most important part of forex trading, because when you start trading forex, even if today we say, hey, go and trade forex, you go there and make money. It's easy to make money on the forex, or to say, how do you make money? You just go, you buy. If it goes in the right direction, you are making money. The problem now is how not to lose that money, because once you lose it, it's so painful. And because you would have seen money, you may want to go back there and you lose again. You go back there, you lose again. Then you just become someone who talks bad about the forex market because you won't be having a good experience there. So we have to try and avoid losing money. Very, very key here. I want to mention it because people lose money here. So please, please, please pay attention to this on how not to lose your money. I'll start by saying how the market works. So we have here a price. See, this is the price, and this is time. You see graphs going like this, up and down, up and down. Sometimes they'll be like this. See? This is how the markets are. And this movement up and down, it happens in seconds. It will be moving up and down always. Every second there's movement on the market. Now, if on this forex trading, you only have got two options. You only have two options, buying and or selling. See, you are either buying or you're selling or closing your trade to collect your profit. You buy when you're at such a position here. You see, when you're here, when the graph is here and you buy, The moment it gets here, okay, let me use a different pen. The moment it gets up here, okay, let me say, the moment it gets here, what has happened from here to there? This is your profit. So if you buy when the graph is down here and then it moves up, you see green coming to your, depending on your broker, you see your profit, you are making a profit, which is the normal thing. You buy at a lower price, even if you are selling tomatoes. That's what we do. We buy tomatoes at 10 Rand, and when we sell it at 15 Rand. That is what happens here in this market. You buy when it's low, and when you're up here, you would have made a profit. Such that if you close your sell up here, you make a profit. Depends on how much you bought, you make a profit. This is where leverage comes in. If you have leverage, you can buy a lot of things. You can buy like you're buying a lot of stock, which gives you money fast. Just a little movement from here to there can get you a lot of profit. But this is when things go well. See? This is when if things go well. Because someone will buy here, thinking that the market is going to go up. Then it goes down. Let's say you buy here. Buy here, then it goes down. You are making a loss. So now with you, Mr. Mtevedzi, and your mathematics that you know and your numbers, you see, and your knowledge of graphs, everything that you do at work, you're working with graphs and all of that, you see, you may think you know a lot, then you come, you buy, and yet the wrong time to buy.
All right.
Yes, you can use your knowledge. You see, you can use your knowledge. You try. We all try our best. But this market, I want to show you, it has no one who is very smart to know exactly what to do and when to do it. We don't know. So this buying and selling, we are almost doing it blindly. I don't want to lie to you. We are almost doing it blindly. We don't know where things are going to go. This is the key. Or if you, so selling occurs here. If you sell when you are here at the top, you sell here. And then the market, the graph goes like this, the way it's moving here. This difference here, it is your profit. No, if you sell when you're at a peak.
Oh, yeah, selling. Okay. Yeah,
yes, so it's your profit, see? But then if you sell and the market goes otherwise, you are making a loss. If the market goes against you, so you have your intuition, you make your decision. No, my decision is to buy. Why are you buying? You're buying because you think the market is going, this graph here is going to go up. That's why you're buying. You choose to sell because you think, it has gone too far up. There is no way. There is no way to go again. It has to come back. This knowledge can come from history or experience, where you know from yourself, the rand has never reached 20. Now it's almost 19. There's no way it's gonna keep going to 20. Then you sell. See, you sell at that moment. Yet that day, it has thought of going to 22 for whatever reason you don't know. Then you start making a loss. However, these losses. Let me now go to the losses and profits. Just want to repeat this: profit and losses.
Sorry.
Yes, Charles. Yes.
I wanted to ask something. When you started explaining, it seems as if like when the graph is at its lowest, at the right time to buy, is it?
Yes.
And then when it's on its peak, is the right time to sell.
Yes.
Right. All right. But the last point that you mentioned, where the graph is.
Yeah. The problem there, Charles, is that this graph and time is still moving. You think, you see, it is here. You think now it's here, it's the peak. Remember, you are here. You think this is the peak, yet it's not. It still wants to
go up.
Up.
All right.
then you would have made a wrong decision yourself. See, that's why I'm saying when you make this decision that I'm at the peak, you think it is high, yet it wants to go higher, or you think it's low, yet it still wants to go lower. You see, you don't know this. I'm going to show you when I show you one of the trades that I made on a demo account. I'll show you what happened to those trades. Then you understand what I'm talking about here. Yes, that's it. So if you think we are at the peak now, you sell. If you think this is the lowest that we can go, or even if it's not the lowest, but then you feel like it's not going to go lower too much, you see, then
Okay.
you buy. That is the thing. I wanted to talk about these profits and losses. These are floating losses. These are floating or unrealized. See, they are floating losses. What you mean there is your account will be saying minus 200. It does not mean you have made a loss of 200. Because the next 5 minutes it can be to change direction and become a positive, a profit. You see, so the profits are floating. They become real if you close. See, they become, or they are realized after what? Closing.
Okay.
Yes, after you close the trade. After closing trade. As long as you leave your trades like that, you know, there are people who can leave the trades for 2 years. Then they buy today, and then after buying today, then the rand strengthens against the dollar. Then they'll be having maybe a loss for a year, a whole year. Then you find that in the beginning of 2023, things change. The rand starts falling. He leaves it like that. He doesn't care about what's happening every day. In December 2023, he goes there back to his account and finds that, oh, the rand now in December 2023 is now 1 to 20. Then he closed the trade. That every day there were losses, up and downs, whatever. It didn't matter to this person. See, you can only realize the profit or the loss if you close. This is where we say you need temperament, because if you are not cool-headed, you see a loss of 200, then you close it, then you get a loss, a real loss now. Yet it was just going to be minus 200, then go back to the plus 500. See, so you need temperament on the market. Don't panic. Just be calm always. And even the profits themselves. Sometimes you stop it when it's to, let's say it's here, which is a mistake that we do usually. I don't lie to you. It's human nature though. It's human nature. It was here, it went up, you are here. You now have a profit. Maybe your profit is saying 100 rand plus 100, you see? You are here, the graph is here, you stop it, you take your 100 rand profit. Yet it still wants to go. So usually people, when it comes to profits, we are quick to close the trade. Once we see a green, close the trade, then we go out. Yet when we have losses, we don't go rush to stop the losses. We let it go and go. Yet if we have the same temperament for profits, we can actually make more money. Where we also leave it to keep going. But we don't know that. That's why I say it's human nature, because if you don't take the profit, you may find that this graph may change and go down and wipe away the profit that you once had. And then you feel bad that, oh, there was actually 100 rand that I could have collected, but I didn't collect. In the end, this gives you this sort of like, this is like a conundrum that you face in the market. To stop the trade, to close the trade or not to close the trade. To stop the loss or not to stop the loss. To collect the profit or not to collect the profit. You see? And also to know if, is this the highest or it's going to still go higher? These are the things that you face in the market. And most of them, you don't have the real answer to that. To be honest, you don't have a real answer to those questions. And because you don't have a real answer to that, that brings risk. This is what we call risk. risk occurs when there are a lot of uncertainties in the market. See, you are not sure about a lot of things. It means the risk there is higher. Now that is why I'm trying to talk about here. I'm going to talk about on how you minimize the risk now, because the risk is inherent in this market. How do you minimize the risk? That is what we'll be talking about. Okay, any question? Any question before I proceed?
Nothing on the side.
No, I'm fine. I'm personally fine.
Yeah.
Oh, you're fine. Yes. All right, good. If you guys are fine, then let's go to that. Let's go to the next part. Remember here, I'm talking about how not to lose money. Don't forget that. So now, once you accept the fact that you don't know, I really want you to accept this, that I don't know, really, because if you lie to yourself that you know, you are going to create a lot of problems for yourself. Accept that, okay, I don't know a lot of things in the market, but I don't want to lose my money. Then what do you do? These are the things that you should do. One, use a low leverage. Leverage is your friend because it helps you make more money fast. Leverage is your enemy because it makes you lose money fast. But remember, as much as you want to make money, which is a good thing, the most painful thing is to lose it. So you would rather go for stopping to lose it than trying to make a lot of money. So greed, don't be greedy. If you're greedy, you run into trouble when it comes to this forex thing. So use a low leverage because it's going to help you not to lose money. Yes, it's going to sort of like restrain you from making a lot of money. But I can assure you, the painful thing is to lose money. Very painful. So try to use a low leverage. When I say low, I said you find leverages from 1 to 1, and some go even to 1 to 1,000. There are brokers that can give you a leverage of 1,000. Okay, or the most common one, as I said, is 888, 1 to 888. There are others 1 to 2, 1 to 10, 1 to 20, 1 to 25, 1 to what. I use 50 myself, 1 to 50. I think it is also very high. It is quite high for a novice. Try to use a low leverage. It's good for you. That's one part of. So you set this leverage, guys. Usually the default, the brokers are, they want you to lose your money, by the way. If you lose money, it's good for the brokers. That's one thing you should know, that the brokers will try to entice you to lose money. So don't just, whatever they offer you, don't just take it. It can be bad for you. Just know that the brokers, when you lose money, they're fine. So what you should do, try to use a low leverage. So you get your account, it's usually set on a very high or the highest leverage. Take it down to a lower leverage yourself before you start doing your trading. If you're using a demo, use also the low leverage on your demo so that you know that, okay, I'm using this low leverage and it's working for me there. All right. Any question before I move on? Then the other thing, apart from leverage, I think I explained what is leverage. Your margin should be less than, I'm just giving a rough estimate here, 10% of account balance, see, of account balance. Your margin should be less than 10% of your account balance. Let me explain this margin a bit more, what we call margin. Your account balance, in your account, you deposited 1,000 Rand. This is the account balance that it will be reflecting account balance 1,000 because you deposited that. The margin if my margin is saying 100 rand, it means out of this 1,000 that I deposited, I am using 100 rand, or I have purchased with 100 rand. That is what it means. So I'm saying if you put 1,000, try to trade with only 100 rand. If you trade with 1,000, it means you have put all your money at risk. It makes you make money fast, but it makes your account to blow, what we call blowing of an account. It can blow very fast too. So try to use a low margin. It will be a monetary, it will be written 100 or 200 or what. It's not a percentage, it's 100. You should look at it and say, okay, my margin here that is reflecting here, is it not too big or is it too small? You look at that so that you use the right margin. That is very, very important. All right, any question here on the margin?
Okay, I wanted to ask, so when I lose or make profit, I make it on the 100 rand only, not on the 1,000 rand.
Okay, Charles, what happens here is, because you may say, oh, I'm trading with 100 rand. No, you will not be trading with 100 rand per se. You'll be trading with 100 rand times your leverage. Do you hear me? Yeah. You are trading with 100 rand times your leverage, which means if your leverage is 1,000, it means you can even buy 100,000 rand. With this 100, it can buy you 100,000 rand if your leverage is 1,000. So you are trading with 100,000 times a leverage, which means that's why I'm saying the 100 rand that I'm using here, which is 10% of this 1,000, it's actually a lot of money because it buys you a lot when you are using a high leverage. It buys you a lot. And now the more you buy, it means if the exchange rate changes by 1 cent, your profit that reflects in your account will actually be big. This is what makes forex highly profitable. It's because of the leverage. It makes you buy a lot of stock, which means if a little bit of movement in the exchange rate can actually mean a huge profit for you. Remember, let's say you buy 100,000, each rand, the exchange rate of the rand increases by one rand. It means you have how much now? See? Your profit will also be like 100,000 profit by just 1 rand. 1 rand shift in the exchange rate. It means a huge profit for you. But then what does it mean again if it was this change is in the opposite direction to you? It also means 100,000 loss to you, you see, which wipes your account immediately. That is why I say leverage is your friend because it makes you make money fast, but it is your enemy because if things go the opposite way, you lose a lot of money very fast. When I say fast, it means even in seconds. After you join and you started saying buy, in seconds, you'll be out of the market and crying if you don't do things right. I'm not saying, Charles, if you use 100 rand or 10%, you are not going to be blown. You are reducing, you're minimizing the risk. Yeah. That's very important. You are minimizing the risk. So if you're a novice, don't go with the 10% that I spoke about. Rather go for 5% or less than 5% until you see what's happening. I can tell you the market can surprise you. See, Mr. Tino, I think you saw like these previous days, last week, the rand was even going to 16 rand to the dollar. This previous week. Yeah. Today it went down. It went to 15 rand 30. You see, that is a huge change in terms of forex. It's a huge change. It means a lot of people were crying because of that. Because now they were getting used to this idea that the rand is just oscillating between 100 and between 16 and maybe 15.70. They were now used to this cycle, and it changed dramatically today. and affected them. So it's very important really to go to the market as someone who is blind, go to the market as if you know nothing, then you operate that way. If you do that, you are not going to face problems. All right, any question? Any question on this?
Maybe not really a question, but you give an impression that forex trading is almost like calculated gambling.
Any question?
Can you hear me?
How not to lose money, and this thing of
we're losing. Is it me alone who is losing?
I can hear you.
Oh, okay. No, I was saying you give an impression that forex trading is almost like a calculated gambling.
Yes, it is like calculated gambling. Because you go there with a lot of things that you don't know. But now as you're going there, Mr. Tino, you're not going with blind now. You know the risks already.
Yeah.
See, you know the risks. So what you're doing now is all you need to do in the forex market, I can tell you, is just to stay in the game. Because as much as you see this oscillation of the exchange rates, see, unlike our maybe if we're in countries where they fix the exchange rate, then you'll be like, you know the exchange rate tomorrow. This one you don't, because it's free floating. It's a floating exchange rate. It goes up freely. It goes down freely. You see, as much as it may go down today, tomorrow it may go up. See? All you need to do is to be there when it goes up, and also to be still alive when it goes the other way around, or your favorable way. You see, yes, that's why I'm saying you try to set your leverage and your margin such that these oscillations of the market can occur without taking you out of the game. That is the main thing you should focus on when you're trading this forex. You try to show, you try to stay in the game. In short, you want to stay in the game. All right, any other question?
No, me, I'm fine. I'm cool.
Okay, you're fine. Tatenda, do you have a question?
Yeah, me, I'm also fine.
Tegra, no question.
No question.
All right. Yeah, I just want to show you the platform that I use for trading. So I'm going to share the screen with you. This account that I will show you, it's a demo account. I will show you a demo account. Let's see, where is? Okay.
Also, basically, your demo account is permanent side by side with your real account.
Yeah, it's permanent. You stay with it. Yeah, and you can, if let's say it blows out, you can create another one.
Okay.
They may give you another one, another demo account. It lives. So I just want to show you this account. Let me connect here. It really helps, eh? The demo account helps a lot in allowing you to make the mistakes. The problem with it can give you false confidence or a fake confidence that you show your daughter or you show your friend and say, hey, he downloads a demo, then he comes there, he makes 10,000 from that. See? Then after making 10,000 from there, he starts thinking that I can do anything, which may not be which may not be true. All right, let me share with you my screen from here. Broadcast. All right.
Can you hear me?
Can you guys hear me?
Yeah.
There is some feedback. I don't know why.
Yeah, there's a lot of echo.
Can you hear me now?
Yes,
Yeah,
perfect.
Okay, without an echo. All right. Okay, good then. Because I'm going on my phone and then using the audio there. All right. What you see on the screen there? Let me trace on top. You see, this is a demo account. These are the things that you see on your screen using the app that I'm using now. That 3,285 there on top, it is the account balance.
Well, I can't see anything. Maybe it's me alone or what?
It could be your internet because we can see.
You
Oh,
can
okay.
you can see.
I think the screen has gone blank. Normally, it's when one's internet is slow a bit.
Oh, okay. But you can see, Mr. Tino.
Yes, perfect.
Okay, good. Yes. The 3,285 on top there is the account balance. In fact, when I started the account, the demo account, I chose to have 3,000 in it, which means the 285 came from the trades that I closed and they were profitable and it added to my balance. So if I do a trade,
Kudzi, you have disappeared.
that is the all right.
We can't hear you.
Yeah.
Can you hear me now?
Yes.
Yes,
Yes.
it's better now.
Yeah, the networks. I'm saying the 3,285, it came from the 3,000 that was already in the account. It was a demo account. I chose to have 3,000. That's what came in there. And the minus 1,317, it's a loss. It's a floating loss on this account. See, it is a floating loss of 1,317. Is the account blown? No, it's not blown. I started using this account. See, when I made the first trade, 7 January 2022. You see the trades that are there. They are for 7 January 2022. That's when I made these buy trades. I bought and the rand that time was at 15 rand 74. It was a bad decision when I bought because I thought it's gonna go to 16. It didn't go there. It went the opposite way. But my account is still standing. It is here, such that the account, the rand can go the other, the exchange rate can go the other way, and I can actually make a profit. The account is standing. Why is the account standing? That's what you need to see. Look at my margin. This is the margin here. It says 944 rand 59. It is actually a big margin looking at it because it's almost like 30% of the account balance. It's a huge margin, but it's not too big because it's keeping me in the game. Imagine if I was using a margin of, let's say that margin here is not 900 and something, it is around 100 or 200. It means my account blowing off is not gonna even happen. See, the account will not blow off. So this is very, very important when you're doing your trading. Keep the margin low. I can also show you the leverage on this account. See, look at the leverage there. I set it to 1 to 50. So from 7 January, today is 12 January, which means for 5 days, my account was having a negative balance, but it's living. It's still existing, it's still okay. The rand really went the opposite way and things are not looking good. As you can see there, that I bought when it was 1574, now it's 1531. That's a huge change in the wrong direction. But if I had sold, if these were not buy, they were sell. They were saying sell. Let me do a sell. Like now, I can choose to sell. Let me sell a small amount. Let me say sell, let's say 100 rand. Okay, it doesn't allow less than 100 rand. Let me sell 1,000 rand. You see, I sold there at 30. Now, this sell trade, it makes a profit if the exchange rate goes, let's say, to 1529, going to 1520 and all of that. It starts making a profit. But if it goes the other way up, it will be making a loss. This is how the platforms work. So you make sure when you make your buy decision, you are buying when it is going to go, the graph is going to go up. You see, like here, look at this graph, how it has been moving up and down. See, the graph has been moving up and down so much. The time we're in this meeting, it went up, it went down many times. So you need really to be temperament, to be cool when you see these negative losses, because now I showed you today with this loss of 887 or 888 as it is. If maybe we come after a week and this account is not blown, if it is still standing, you may find that it may be having a profit. The key now is for me not, because the moment let me do this. I want to close this cell whatever with 1280. If I close it, now the loss is going to reflect on my balance. Now, because it's now a real loss. It was a floating loss, but it's now a real loss. It took money from my account balance. The same thing, if I go to this one for 451, if I close it, it will subtract 451 from my account balance. See? So you need to be able to tolerate these floating losses without closing the trades. You need to be able to stay with negative balances on with these losses in your account without blowing your account. And the key to that is a small leverage and a small margin. All right. Any question? I think the session has been long already.